Welcome to Beat the Bell. I am Dominique Broadway, and what a week we have ahead of us, okay? So if you have been feeling like the financial news has been a little bit on pause, well, it literally was, okay? Because as of last week, the government is officially back open, round of applause, after 43 days. Yes, you heard this correct. 43 days. Insane, right? That is the longest government shutdown in U.S. history. And today, we're watching Netflix make stock market history with a split that has everyone talking, all right? But here's what matters most. How does all of this affect your wallet, your investments, and your money moves that you will be making this week? So let's get into it. All right. Let's talk about this whole government reopening because this is major, all right? And this does actually directly impact millions of Americans' wallets. So the basics is that after 43 days, President Trump signed the funding bill last Wednesday, November 12th, that the government is now funded through January the 30th, with some agencies like agriculture and veteran affairs funded through the full fiscal year. So what does this mean for your money? Well, first up, SNAP benefits. If you or someone you know relies on food assistance, this was probably the most stressful part of like the whole shutdown for so many people across the nation. The good news is that SNAP is now funded through September 2026. So we got a whole year. The legal battles are over and those benefits are secure for the foreseeable future. Second, federal workers back pay. So if you're a federal employee who went without a paycheck for over a month, back pay started going out this past Sunday. And that wasn't guaranteed, so that's great. Check with your agency, obviously, about timing, but that money is on the way, okay? Third, airport delays. This is another big one. So you guys, if you traveled during the shutdown, then you probably felt it, okay? TSA and air traffic controllers were working without pay, and it showed, okay? Things are getting back to normal, finally. But expect a few more weeks before travel is honestly completely smooth again. So here's your money move. If you traveled and experienced any major delays during the shutdown, keep your receipts, okay? Hold on to those receipts because some airlines have offered compensation or even credits. So don't leave money on the table if you don't have to, all right? And follow up with those claims. They're banking on the fact that you won't follow up. And if you're a federal contractor, well, unfortunately, you typically don't get back pay like federal employees do, right? So if this impacted your income, now is truly the time to reach out to your creditors about hardship programs and any other programs that could be available to you. And also review your emergency fund strategy so that you are much better prepared if this, and hopefully it won't, but if it ever happens again. Because we have seen this movie numerous times. Too many times. All right. Now let's talk about what's actually happening right now as you're listening or watching this episode. So the Netflix stock split, exciting, right? So Netflix shares close Friday at $1,112.17 per share. So today, Monday, November 17th, they're trading at around $111.22 or so. Okay. Now that is after a 10-for-1 stock split. So let me break down what this means for those that do not know. So if you owned 10 shares of Netflix on Friday, worth about $11,120 or so total, right? Today, you would own 100 shares worth the same $11,000 total. Now you just have more shares. So your investment value has not changed. It has not changed. You just have more shares at a lower price. So think of it like this. Okay. It's like exchanging a $100 bill for 10 $10 bills. Same value, just broken into smaller pieces. So why does Netflix even care to do this? Well, they explicitly said this is about making the stock more accessible, right? To their employees who participate in stock option programs and also to you. So when a stock is over $1,000 per share, it gets pretty expensive for regular employees and people like you to buy in. So what this means for your wallet. If you've been wanting to invest into Netflix, but thought, oh my gosh, over $1,000 for one share, that's my major bill or whatever. Well, now it's about $111 per share, which is way more affordable and much more digestible. Do you agree? Okay, but here's the real talk. A stock split doesn't make a company more valuable. No, Netflix is the same company that it was last Friday. All right. So the fundamentals have not changed. They're still crushing it with 300 million subscribers. Their advertising business is booming. Okay. And they're even expanding into live sports with those NFL Christmas games coming up. However, and this is really important, Netflix is trading at about 47 times earnings right now. That's expensive, y'all. Okay. So for context, that means that investors are willing to pay $47 for every $1 of profit that Netflix makes. That's a premium price tag. Okay. So your action items, if you're thinking about buying Netflix, don't buy it just because of the split. And a lot of people do that. You don't have to. Buy it because you believe in the business's long-term growth, okay? So look at their subscriber growth, which has been rising, their content strategy. They're even expanding into podcasts. They're moving into advertising and live events. So make sure that you understand what you're actually buying. And if you already own Netflix, like I do, well, congratulations, right? You just became a bigger shareholder. Literally, you have more shares. Shout out to you. But remember, the total value is absolutely the same. Okay? All right, money family, let's get into the next thing. Let's talk about what's coming this week that could actually move your portfolio and your money. So we have economic data that is finally back. Remember, we lost 6 weeks of economic data during the shutdown. So that data is starting to flow again, but with gaps, all right? So here's what's hitting this week. Thursday, we finally get September job data, okay? Finally, yes, September. Yes, I know it's November. It's 2 months late, but it's coming, okay? Economists are expecting moderate job growth and unemployment around 4% to 3%, okay? And this matters because it tells us if the economy is cooling down too fast or just staying steady, all right? And Wednesday, the FOMC minutes from the Fed's last meeting will finally drop as well. This is where we get the behind the scenes conversation about interest rates. So we'll get the details. Now, right now, chances of a December rate cut are fading very, very, very fast. These minutes will also tell us why, okay? So what does this mean for you? If you are thinking about refinancing your mortgage or taking out a loan, right? Don't hold your breath for lower rates, okay, before the end of the year. So the Fed is watching inflation like a hawk, as they should. And they're not in a rush whatsoever to cut rates again, okay? Remember that. Now, let's talk earnings. I'm so excited for this week, okay? Because this is one of the biggest earnings weeks of the quarter. The year of the quarter. We're getting a full read on the consumer, how consumers are moving, and the economy. So Tuesday, just to name a few, we have Walmart reports. This is your check on how everyday Americans are spending, okay? Are they trading down to save money or are they still opening their wallets despite high prices, okay? Then on Wednesday, this is the monster day, as we say. Nvidia, my favorite stock, reports after the bell. This is the most important earnings report of the quarter. The entire AI trade, the tech sector, the market's momentum, it all hinges on what Nvidia says Wednesday night, okay? Also on Wednesday, we have Palo Alto Networks, ticker symbol PANW. They'll be reporting. That is your cybersecurity bellwether. Lowe's is also reporting, telling us about home improvement spending. TJX Companies, which is TJ Maxx and Marshalls, my mom's favorite stores, are showing us discount retail trends. And then Gap reports as well, giving us insight into the whole apparel spending. On Thursday, Target, I know now y'all don't mess with Target no more, but Target's reporting another major consumer spending indicator. Are middle income shoppers still spending on discretionary items? And then we have Home Depot who's reporting, rounding out our whole picture of the housing and the home improvement sector. Listen, y'all, okay? This earnings lineup is clearly stacked, okay? Between retail giants like Walmart and Target, home improvement players like Home Depot and Lowe's, apparel with Gap, and then discount retail with TJ Maxx, cybersecurity with Palo Alto, and then the crown jewel, my baby, Nvidia. We are going to learn everything about the health of this economy this week, okay? So for your portfolio, if you are heavy in tech stocks, especially AI-related names, this is a week to watch closely, okay? Nvidia's results could make or break the entire sector, and we're hoping that it clearly makes it. If you own retail stocks or work in retail, pay close attention, right, to what these companies are saying about consumer behavior. This is going to be big. The market has been rotating into defensive sectors as well, like healthcare and consumer staples. So that's Wall Street way of saying we are not sure about these tech valuations. All right. So here's your money move for this week. Number one, check your portfolio allocation. Okay. If you're 80% tech, ask yourself if that still makes sense given current valuations. Okay. Number two, review your savings goals for 2026, right? We should be planning for the next year. With the government back open and economic data flowing again, it's a good time to plan ahead. So what do you need to accomplish in the next year? Ask yourself that question. Okay. Number three, don't chase the Netflix split. I know it's tempting when you see a stock on sale, okay? But remember, the price dropped because of the split, right? Not because the company got cheaper. It was all because of the split. So keep that in mind. All right, here's your homework for the week. And I want to hear from you on this one. So the week start financial reset challenge. So this week, I want you to do one thing that moves your money forward. So I'm going to give you some options. The first one, review your investment portfolio. All right. When's the last time that you actually looked at what you own? So take 30 minutes this week and check in. What do you have? What's in there, right? Are you still aligned with your goals for this year and for next year? The other thing I want you to do is update your emergency fund goal. After seeing what happened with the government shutdown and just the mess of this world, if you're a federal employee or contractor, you need to ask yourself, does your emergency fund need to be bigger? Okay. Now, let's get real about that number. Don't sugarcoat it. All right. Now, option three, schedule your 2026 money planning session. Block out 2 hours before Thanksgiving to map out your financial goals for next year. Okay. So what do you want to accomplish? Right? What do you want to make happen next year? So text me which one you're doing at 202-217-1035. I want to know what action you're taking this week. All right. I'm going to hold you to it. And if you complete your challenge, text me back done. I love seeing y'all take action on your money. It's one of my favorite things about the Beat the Bell show. Okay. And speaking of taking action, the cash flow code challenge is starting this week, you guys. If you've been waiting for the right time to master your money and your money flows and finally understand where every dollar is going, this is your moment. Okay, so head to the link that's in the show notes, and we're going to be showing you exactly how to create your own cash flow with whatever money you have. So please join us, all right? Let's build that financial foundation together and get that cash flow flowing, because that's what we need right now, okay? So let's recap what matters for your wallet this week. Number one, the government is back open, all right? SNAP benefits are secure. Federal workers are getting back pay. Things are getting back on track, okay? And economic data is finally flowing again. Use this stability to get your own financial house in order. Number two, Netflix's, I can't even say it, y'all. Netflix's stock is making headlines today. The split, right? But remember, a lower share price does not mean a better deal. Do your research before you buy. Number three, this week is packed with major earnings reports. I mean, packed. Walmart, Target, Home Depot, Lowe's, Gap, TJ Maxx, Palo Alto Networks, and obviously the big one, Nvidia, on Wednesday. So these results will shape market expectations. So keep your eyes on your portfolio, okay? And it's going to really shape these expectations heading into 2026. Pay attention, but don't make emotional decisions, y'all. Please don't do that. If this episode helped you understand what's happening with your money this week, please do me a favor. Make sure that you share it with someone who needs to hear it. Send it to your group chat, send it to your mama, send it to everyone that can benefit, okay? Post it in your stories, but essentially share it. And please do me a favor and subscribe, all right? So this was another episode of Beat the Bell. Hopefully you guys have an amazing week. It's going to be fun. Keep your eyes and ears open to all the things happening in the market. And remember, we do this every Monday and Friday. So subscribe, and I will see you in the next episode.